Welcome, everyone. Thank you so much for joining us this morning, or if you're on the East Coast, this afternoon. We have Natasha Swift, who's our Global Finance Manager, joining us today. She will be hosting, and then I'm here to support you. So if you have questions, if you need any help, that is what we're here for. Please feel free to put your face up. You are more than welcome to turn your cameras on, and you're more than welcome to turn your mics on. If you don't feel comfortable doing that, not a problem. There is a live chat functionality on this that you can chat in the box, and I will make sure that Tosh gets your questions. So without further ado, Tosh, you can take the floor.
Hey everyone, like Celeste said, good morning, good afternoon. Apologies, I've got dual screens, so if I'm not looking in the right place, that's why. Can you, let me double check, can you all see my screen? Cool. So, like Celeste said, I'm the finance manager here at Durham, based in our global head office. Can you see the full screen now of my presentation, Celeste? Sorry, it switched screens. So I'm the global finance manager. As you can probably tell, I'm not actually American, but I am based here in our LA office. So I'm super honored to be running this session for you guys today. To be honest, if the only thing you get out of today is that you don't feel like you're alone or you're the only one in this position, that's a win for me. We're all in this together, so you're not the only one. There's a whole lot of PSTs, different professionals, students, all in a very similar position. And we just want to say that we're here to help you guys as much as possible during this time. So we're going to talk through a couple of different things. We've switched it up a bit based on the latest information that's coming through. So first of all, I'm going to start with some quick finance tips. So how can you best manage and navigate through this kind of unprecedented situation? I'm going to touch on the different Fed support that's available, focusing on PUA, PPP, EDLIs. The latter two are the small business loans that have currently been paused because the funding ran out, but hopefully today the second wave of funding will be approved. So I'm going to touch on those still because I think they're still relevant, and it's useful to empower you with as much knowledge as possible now. And then I'm going to touch on the finance statements, and then we can do a bit of Q&A. But first of all, I wanted to just understand a little bit about you guys. So if you could just drop in the box a yes if you've applied to any of the PUA, PPP, EDLI, that would be great. And I can understand, Celeste, if you can just feedback if who's watching, who's listening, have you applied? And then also if you could just let us know kind of what your background is. Are you a sole proprietor? Are you an employee? Are you a student? That'd be really helpful, and then I can help tailor what I discuss and talk about. That would be really cool.
Perfect. So if everybody wants to chat in the live chat, that's super easy. We have some undergrads on, which is great. We have an employee of I think a larger national account, like an Ulta, Hand and Stone. Great. Another employee that's just an esthetician. So what's really nice about what Tasha is going to go over is it will help everyone. So if you're not just a business owner, that's not a problem. This also talks about the unemployment factor going on right now. And we'll also talk about, there are some grants that we've heard about for undergraduate students. So some really great information that's kind of tailored for all. So I'm really glad to see that we have a mixture of professional skin therapists or future professional skin therapists. So we have an instructor here. Love seeing instructors on. This is really great information that you can take back to your students. Obviously, this is a kind of a specialty environment right now. It's not necessarily how we're always going to be, but just some really great information to take back to your students on what they can kind of expect, I'm assuming at least for the next 3 to 6 months, if not longer, of understanding what to do once they actually get out of school. So nice mixture, Tosh.
Cool, great. Thank you, everyone. Okay, so I'm going to start. Oh, here we go. Just some finance tips. So I don't know how many of you heard or already have one in place, but having a cash flow plan is super important. Doesn't need to be complex. This can be as simple as you want to make it. This is just about understanding what you have coming in, which has probably been significantly reduced, and what you still have to go out. And then over a period of time, kind of the suggestion is potentially even daily at the moment, maybe weekly is easier to manage, is understanding at what point you're going to run out of cash potentially. There is a really simple template already on our In It Together website. So, and there's also a really in-depth kind of walkthrough of the template that's on there. So after this session or when you have chance, take a look at that. Oh, someone loves drawing on my screen. I don't know if that's is this the screen that you can see, the one with the notes? Let me switch this 1 second. You should see this one. Why? Let me present and then I will switch it. 1 second. I don't know. Let me just carry on. Let me just still see my screen, yeah? Okay. I've flipped. Here we go. So, like I say, after the session, I would go back onto the website, download the template, take a look. The point is to understand your comings and goings over the next few weeks and months. And I think there's an opportunity here that you need to drive cost reduction. So this will help lower the risk that you run out of cash. So where can you look? Communicate clearly with your vendors, lenders, and suppliers. So for instance, here at Durham, we've extended our credit terms. That should help alleviate some of that immediate cash flow issue. There's also other options. So asking your landlord about reductions in rent. So don't feel like you're the only one that's going to be going to your landlord to ask this. You are going to be part of many of people who will be asking the questions. If you can also demonstrate the fact that this is going to be a short-term impact, so actually you're not going to go out of business, you're just trying to manage the impact so that you can come back and bounce back quicker. So ask for rent reductions. We also have a letter on that website too that is kind of a template that you can send to your landlord to ask for those kind of options. Credit card companies, if anything, utilities, hopefully they'll be significantly reduced if you have a business at the moment, given you're not there, you're not using anything. The other options, which we'll touch upon later, is looking for additional income. So one way is to reduce your costs. The second way to increase your cash flow is to obviously increase your income. So there's government state packages, which I'll touch on. To be honest, there is also now interest rates at a kind of record low. There is a lot of opportunity for loans, renegotiations, refinancing options. So anything that you currently have, you should be looking at to see if you can get that at a cheaper rate, if possible. We also have the impact of tax. So the fact that we don't have to file your taxes until July 15th. I mean, I'm one of these people. Maybe that's just because I'm unorganized. But this should actually mean that you don't have to, if you owe a tax bill, this also means that you then obviously shifting that cash to be due later in the year, when hopefully you'll be up and running and back having more income. There's a point here on insurance coverage. So depending on your policy, you might have business interruption in policy coverage. It's kind of a bit of a grey area that some insurance companies are not covering COVID. But to be honest, if you don't ask, you don't know. So always ask. One thing I'd say is I wouldn't advise looking to cut your insurance policy, given this is super important for when you're back up and running. But there's no harm in looking to see if there's cheaper options with the same coverage, etc. Do we have any questions, Celeste, or anyone have any things that they've done so far that they've really helped their cash flow?
The only thing we've done actually is we refied our mortgage rate. So that was something that, you know, maybe not everybody has, but something to also look into as well. And I know a number of banks are looking at how they can support you in that capacity too.
Cool. Okay. So I'm going to move on to the Pandemic Employment Assistance Program. So this is nicknamed PUA. This is relatively new. It's part of the CARES Act. For instance, in California, it's not opened yet. It opens on the 28th of this month, so Tuesday. This is for individuals that don't normally qualify for unemployment compensation. So if, for instance, you wouldn't ordinarily be accepted for unemployment insurance, this pot of money is for you, basically. To qualify, you could be a business owner, you could be self-employed, independent contractor, a gig worker, so Uber driver, etc. You might, if you don't have sufficient work history, this is also an opportunity for you to access some funds. And also if you've exhausted everything else. So if you've exhausted your opportunity for unemployment insurance, actually this pot of money also can be used for that. So like I say, this one's not open yet in California. Texas is the spin on my presentation today. Texas is open, accepting applications 24 hours a day online. So I'm just going to walk through a California example because I found the information more easy. So what's good about PUA is also you have the opportunity to have it topped up by the $600 that everyone's a week for a set period of time. So not only would you then get this PUA, you'd also get the benefit of the $600 a week for a set period of time, which currently, if you're on unemployment insurance, you're getting. So this example in California, the minimum weekly benefit is $167, but it could be adjusted depending on your proof of earnings. Plus you would get the $600 a week between the end of March and potentially July. So it's up to 39 weeks, which is quite a long period of time to get this. So this is a opportunity for those that perhaps fell between the cracks of unemployment insurance, didn't get PPP, didn't get an EDLI loan. This is a different option for you to access funding. And to be honest, it's quite a lot on a weekly basis and a pretty good opportunity, I think, to file a claim. I guess some things that I was reading about this week in prep for this session is getting access to your local state's unemployment office is a bit of a nightmare. So where possible, quite a lot of states are saying apply online. If you desperately need to contact them, I was reading about some people kind of hacking the system, as in doing it at 3 a.m. when the system's not falling over. Doing it when you're outside of a usual cycle, like most people perhaps are logging on and trying to do it straight away. Maybe if you just wait a couple of hours, it's going to get better. So I appreciate the systems might not be that well in place, but the volume of applications at the minute is kind of making them fall over. So just consider how you could maybe try and log a claim outside of usual hours, if that's going to help. Any questions on this one? Because this one's relatively new. I know Texas is open, like I said, California's not open yet. But I would say if you're ticking these boxes and you haven't got anything else, this is a great opportunity to get some income.
Tosh, do we have this information for all of the states? Is there like one local website that has all of the states? Is it really up to each?
So my understanding is PUA is all states, just when they're opening is by state. So there is a link that basically has a link to every state's kind of work department. So for instance, when I was looking on Texas, it was saying we're accepting applications now, apply online. When I look on California, it's from 28th. So I think it's in some of the links that you send out.
Perfect.
We can add it and highlight it and say that this is where your by state kind of local one is.
Perfect, thank you.
But yeah, my understanding is this is federal funded, so actually all states should be doing this, which is good. So this was just Texas guidance. So I quite liked the flow on the right hand side. So it was kind of, if you've already been approved, then no action basically. If you are kind of fall into this non-traditional applicant, which is your contractors, self-employed, etc., you apply online, they will assess you, and then they'll either decide if you're able to have PUA or UI plus the $600. So it's kind of, it's not up to you to say, oh, I need PUI, please. In this instance, they will do that bit for you. Sorry, PUA. They will do that for you, and then you can have access to the $600 too. They also said in this instance in Texas, so if you've already exhausted all your unemployment insurance, they will notify you, and then they will assess whether you're eligible for PUA. So you have to be cautious of not overwhelming the system with like multiple requests. So I think they're trying to make it as easy as possible for who actually needs to reapply, etc. We'll be sending out these slides at the end of the session anyway, so you guys can have a dig in. Any questions on PUA? No? Okay, I'm going to touch on the SBA loans. So in full transparency, these are the loans that currently have closed. Today, there's the final vote on the next stimulus bill to actually open up some additional funding. So there's two in this sense. So there's Payment Protection Plan, PPP, EIDL, Economic Injury Disaster Loans. So I'm going to first touch on PPP, which is, so both play slightly different roles. So depending what you need to use the money for, you need to assess which one would be of benefit most to you. PPP is a better option to access lower rates if you need to just use it as a loan, but it also offers opportunity for it to be forgiven. So therefore it would just act like a grant. So if you meet the criteria, potentially this is money that you wouldn't have to pay back. So that would be great. Okay, so who's eligible? Small businesses, less than 500 employees. Like I said, it has a low interest rate of 1%. So even if you did need to use it as the loan part, then it's very low. You can defer your loan payments for the first 6 months. There's no collateral, no personal guarantees needed, which is different to EDLI. It covers expenses dating back February 15th to June 30th at the moment. And like I said, the loan can be forgiven, so therefore it turns into a non-taxable grant. And I'm going to just touch on So this was when you could apply. So at the moment, you can't apply. The hope is that they will reopen applications. What's currently unknown is what the backlog is. So after the first round, the funding ran out, and they obviously still had a number of applications. So it's not clear how much funding is going to be left after they've gone through those. Who can you apply with though once it does reopen? Any SBA lender, and they've also opened up some more unique lenders that aren't our usual SBA lenders, so Payroll, Fundera, and there's a whole list of them basically on the SBA website that have an opportunity to be funded by. PPP is basically to cover your employees' wages, salaries. So there's kind of a rule that 75% of the loan has to be used to fund payroll and employee benefits. So this includes healthcare insurance, for instance, their monthly payroll or bi-weekly payroll, etc., that you're paying your employees. There is an opportunity to spend the 25% balance on mortgage obligations, for instance, interest incurred before February the 15th, rent, utilities. So that split has to be super clear, because on the basis of which the loan is granted, it's assumed the same basis will be used to assess whether it can be turned into a grant, basically. So one of the tips that we have is that actually maybe it'd be worthwhile to have a separate bank account to kind of isolate that money from your usual run and your usual bank account, so you can clearly see what transactions are coming in and out, where the money's going, what are you spending it on. The cleaner that is, that should hopefully make it as easy as possible to then apply for the forgiveness, basically. Completely optional. It's just an idea that we have. I mean, reconciling my own bank account's hard enough, so maybe having a separate one where you can actually see what you've paid, when you've paid it, and who you've paid it to for that loan would be super helpful. And like I say, if you meet the criteria to have it forgiven, 100% can be forgiven, which it would be great, basically. So how is the loan decided? It's basically your monthly average payroll costs in 2019 multiplied by 2.5. So up to 10 million. So it's slightly different if you're a seasonal employer, they'll take a 12-week period. If your business didn't exist before June 30th, 2019, they'll look at your costs in January and February 2020. So it's slightly different there. And then I guess it's probably useful to clarify what payroll costs actually are. So these are salary, wages, commissions, or tips. There's a cap per employee. So one employee can't earn more than $100,000 in a year. So if they do, then you need to make an adjustment in your application. So say someone earns $110,000, actually the maximum you could do is 100K divided by 12 times by the 2.5. I'll show you an example of that in a minute. Employee benefits, state and local taxes assessed on compensation. For sole proprietor or independent contractor, wages, commissions, income, and net earnings from self-employment are also capped at that 100K. Let me walk you through a quick example. So for instance, here, the first person is earning $6,000 a month. Their total in 2019 was $72,000. Therefore, the monthly average is the 6. So therefore, 2.5 times that 6 is 15K. That's the potential loan that they could get. The second example is if someone's earned $120,000. So it's capped at 100K. So you basically have to ignore the 20K additional that they earn. So therefore, the monthly average is 833, and therefore 2.5 times is $20,833. So that was for a sole proprietor, but for a business with employees, you can also take into account their tax, their health insurance, etc. So for instance, this company that we've made up in this spreadsheet has 2 employees. One earns 71,400, one earns 79,200. The sum of those and their average cost is 12,550. Therefore, the potential loan is $31,375. Any questions, Celeste? Are we good? Cool. Okay. If you run a business on your own and your business is a sole proprietor, this means that your business income is reported on your Schedule C with your personal tax return. As long as your business was operational prior to February 15th, you can apply for the PPP. Your salary will be determined by your net profit. So if you were operational in 2019 and have filed your 2019 taxes, this is reported on line 31 of your Schedule C. So this is what it should look like, and then it's just in this highlighted area what that number is, and that's what you'd be using as your basis for the calculation for the loan. If you haven't yet filed your taxes, you should be able to find your net profit in your income statement. So you might not have filed your taxes yet because maybe you're deferring that to July to manage your cash flow. It's kind of a double-edged sword because lots of these schemes and programs are then asking you to kind of prove your income. So there is a way around it. So therefore then use your net profit line on your income statement, so long as you have that as backup. It's the same even if you're a sole proprietor, that you can't have earn more than 100K, basically. So the loan forgiveness thing is, there is nothing official that has technically been kind of put out there of what you will have to submit or exactly the paperwork you'll need, but it can probably likely be assumed, which is what we're hearing in lots of industry seminars, etc., that forgiveness rules will follow the same rules as the loan assessment. So whatever you were assessed on, so if you included your healthcare insurance for your employees, then the forgiveness will also include the healthcare insurance that you've paid, basically. So it's a like for like. There is kind of some other criteria that is expected, that you can't adjust the number of headcount. So you can't reduce your staff during this period and then try and claim that back. Your forgiveness will be reduced, basically. The aim of the scheme is to keep people in work, keep people having salaries, even if they can't work officially. So it kind of makes sense that the forgiveness is also based on that. So what do you need? There's an application form which is available online. My first port of call would always go to the SBA website. There is literally all the information you need right there. There's a couple of things that you probably need to gather from your own resources and your own information. So obviously any payroll tax filings, payroll tax forms, your miscellaneous income, your 1099 basically, your income and expenses if you're a sole proprietor.
Tosh, we have a question. If line 31 of the Schedule C is a negative, can you still apply?
That's a good question. I don't see why you can't, but then I would be interested to see how they calculate what you get. Let me take that one away and ask, and I'll come back to you.
Thank you.
Okay, so what can you do now? like I said, these are currently closed. Today they're voting on the final bill to release the additional funding. So if you've already applied, great. We were talking about this just before you guys have joined. Stay connected. Hopefully you'll end up with a good communication flow between your lender. If you haven't applied, you can still kind of prep. So collect your documentation, get up to date on your bookkeeping, on your taxes if you can, to use that as the benchmark. And if in doubt, explore additional funding. So I wouldn't say wait for this funding. Over the next few days, we're going to see, I guess, how quickly it's churned through. But there are different pots of money out there already available. So there's no reason why you can't be prepared for if it reopens, but also look at alternatives. The second kind of SBA loan is the Economic Industry Disaster Loan. So COVID-19 has been classified that this is an economic disaster. So you can borrow up to 25k without collateral. Anything above that, you need collateral from my understanding. Previously, they were giving grants, even if your loan hadn't yet been accepted. Obviously, the money quickly dwindled away, and then they changed that to £1,000 grant per employee. And as I say, this is now currently paused. I'm not 100% clear if the same, if it reopens, the same will be applied in terms of the grant aspect of EIDL, and that's something we're kind of waiting to find out. So one of the big questions is, can you apply for both? Yes, but be cautious that you can't use the money for the same thing. So if you're intending to apply for both and use the money to pay the wages of your employee, you're using it for the same purpose, and therefore you can't do that. You can refinance your EIDL to a PPP. Given how quick the PPP is running out, I don't know how easy it is to then switch. So that is an option though, and obviously PPP is on a lot lower interest rate. It's worth noting that EIDL, there's no forgiveness. So the only option was the grant initially. The rest of it is completely treated like a loan. The interest rate is a lot higher, so it's up to 3.75% for businesses, slightly lower for non-profits. The term of the loan can be up to 30 years, but it can't exceed it. So if you were comparing the two, in terms of interest rates, you would probably go for the PPP. If you needed the money to spend it on slightly different things than the EIDL loan, it's probably worthwhile. So if I just go back to what you can spend the EIDL on is working capital, inventory, equipment purchases, real estate payments, and other operational expenses. It's more broad than what you could potentially spend the PPP money on, which needs to be that 25-75% split. So that could also be a decision of which one you go for. Conscious I might have raced through that a little bit, so if anyone's got any questions, we're good. So the Families First Bill, this is more just for information. It depends, you need to know about it if you're employing people, but also if you're an employee, it's useful to be empowered to have the knowledge of what's going on as well and your own rights. So this is effective as of the 1st of April. Small businesses, less than 500 people, must provide 80 hours of paid sick leave at 100% for quarantined employees. So basically, if they're diagnosed, awaiting diagnosis, etc., you have a right to 80 hours paid sick leave. because of this bill. It then reduces down if basically employees need to provide care for somebody else. So maybe they don't directly have COVID, but someone else they need to provide care for. And then there's also a kind of a clause for those that might need to become their children's teachers, caregivers permanently while schools are closed. So you're entitled to up to 10 weeks expanded leave at the 66% who are unable to work due to school closures. There is a potential exception with less than 50 people, so it's worth reading the fine print and checking what you're obliged to get and do if you have employees. There is employer support though, so you get a $1, a one-for-one basically tax credit for wages, healthcare claimed immediately. It's kind of a little bit grey of how quickly they'll turn this around. It's ASAP, but whatever that means in the current circumstances is a little unclear. There's more details on this one in the appendix. So after this session, we'll send around the presentation, then you guys can have a dig into some of the links, etc. Any questions on that one? Cool. Okay, the final area that I'm just going to touch on quickly is your banks or lending institutions might be asking for certain financial documents. They might also ask for financial statements that relate to your business. So we just wanted to make sure you're empowered to exactly know what they are, what you can do with them, etc. So the first is your income statement, also known as your profit and loss. So this shows over a period of time your income and expenses. So maybe you can have a profit and loss for the year. By month, it shows you how much income you've made, what your expenses are, and therefore what your net income is, which could be useful if you haven't yet filed your taxes, because you might need to use that net income calculation for PPP. Then I touched on the cash flow at the start, and like I said, I would recommend going back over the recording that's up there on the website. Already has some details how to work through the template, etc. This shows your inflow and outflow of cash. So basically, over a given time, will you have enough cash to survive that period of time? So it's how much is coming in and how much is coming out. And then finally, your balance sheet is basically a statement of your financial position that lists assets, liabilities. So if you own your building, or if you owe people money, or if you're owed money, these are your assets and your liabilities. And your balance sheet's at like a point in time. So it's usually a snapshot of where you stand at a point in time. There's some more details in the appendix as well. So actually that was all from me. So if anyone's got any questions, happy to try and answer them now. If I don't know the answer, I'll come back to you. I also wanted to say that Derm's running something that I'm super proud of. And I think as a business and a company, it's really, really industry leading. So I'd say the Back in Touch campaign that's going to be kicking off soon. So there's sessions on 30th of April, where the education guys are going to be leading some sessions on actually how do we get you guys up and running, and how actually we navigate this new era of living with COVID-19, working with COVID-19, and how you can get services and bring your business back up to speed. So that's all on the same website where everything, Celeste will post everything. So I definitely recommend checking that one out. It looks like it's going to be really cool and super helpful for you guys.
Awesome.
Cool, and that's all from me.
Thanks, Tosh. Yeah, everyone, we're really, really excited to be hosting the 4th installment of the In This Together, which is really kind of navigating the next next couple of months, the next couple of years of how we're going to kind of navigate through working in an industry that's all about human touch. It's very important to our industry and how we're going to do that and how Dermalogica can support everyone in their next venture into it. So we're really excited to be hosting that April 30th. So thanks so much, Tosh, for bringing that up. We really appreciate the support on it. So we do have a couple of questions before we get off of this. And then just a reminder, like Tosh said, what I do is I send an email out usually within 24 hours with the updated presentation. Because I know Tosh brought in some new points on PUA and some new information on the other loan programs. So we will bring that forward. I also send all of the recordings to you. So if you want to look back and see some information that maybe Stuart spoke on, or Lily or Ambrose, you have those opportunities as well. And then a lot of this is going to be hosted on the In This Together website, where you can find it at any time. Or if you have anybody that's asking questions or needs support, because I know as PSTs, we're very much a community, you can always drive them back there as well if they weren't able to join one of these sessions. So please feel free to do that. Okay, so we do have a question. Can we use EIDL or PPP for all of the PPE and new requirements upon opening? So all of that personal protection equipment and everything.
I think this will depend. So based on the PPP, I don't think you can, given it would be the 25-75%. I mean, you could choose to spend the money and then it would act as a loan. You wouldn't get that forgiven. EIDL, I don't see why you couldn't, given it says operating supplies, and technically they would be operating supplies at that point in time. Let me ask for some clarification, but that's kind of based on what I've read. I don't think PPP would be the right port of call, but actually EIDL probably could be.
Maybe. It's a great question, because I know a lot of us are going to have that as part of our future, right?
Sure.
So, so that's going to be some information also covered in the Back Together campaign, and information that we're going to be doing next week on, you know, what's a great strategy for you to do as a skin therapist and everything. So a great question. Thank you, Linda, for that one. I'm not seeing anything else question-wise, but I'm trying to think of anything that I've seen lately that people would have questions on. Thank you for covering the PUA, because I know that was brand new when we hosted on Tuesday. Yeah. So it was very nice that we were able to kind of cover it a little bit more in depth. Just so everybody knows, on the presentations, there are appendix at the end that will give you more information on all states. So it has a number of links that I know we may have just covered Texas today, but it does have information on you know, obviously there's 50 states that you can go and look and see what's more relevant to you if you're in a different state than Texas. So please note that we try to cover everything for all parties. Other than that, we really appreciate your time always. Thank you, Tosh, so much for supporting us. We love seeing the finance team. It's very enjoyable. And then please feel free when I email you that you can email us back. Tosh, Stuart, Ambrose, and Lily's emails are on there. Please remember to put me on the email as well, just so I can make sure to follow up with you. Because sometimes you'll get off of this and then you'll start thinking of other things. That's not a problem. Or you'll start looking through the presentation and think of, wait, I have something that's actually more relevant to just me. Not a big deal at all. Please feel free to do so. And we look forward to seeing you hopefully next week at the Back Together campaign. And then always, feel free to take any one of our de-streaming classes that we have to offer during this time. Thanks again, Tosh. We really appreciate it.
No problem. Thank you. Thank you, everyone, for joining. It's been really helpful. It's really great to have you on board. So
perfect. Thanks so much, everyone. Have a great one.